Hello and welcome. Moss Adams is pleased that you've joined us for today's session, Indirect Costs, Not-for-Profits, Governments, and Tribes. Before we begin, I'm going to play our housekeeping video.
Welcome, and thanks for joining. We're pleased to present our continuing professional education webcast series. Before we begin, please keep the following in mind. You can customize how you view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can adjust window size and placement or enter full screen mode using the controls at the top right of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons that relate to a different aspect of our session. You can download a PDF of today's slides from the Slide Deck and Handouts widget. You can ask questions by typing in the Q&A window and clicking Submit. We'll do our best to answer all questions or follow up via email. If you experience technical difficulty, refresh your browser by hitting the F5 key. Today's session offers 1 CPE credit. To receive credit, you must meet the National Association of State Boards of Accountancy requirements. You must attend at least 50 minutes of the session and respond to at least 75% of polling questions. To participate in the polls, please check the button next to your answer within the slide window and click Submit. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry if you can't download your CPE certificate today. We'll email you a copy in 2 weeks. If attending this webcast in a group, you must complete our Group CPE attendance sheet, available in our Slide Deck and Handouts widget to receive credit. Please have all group members sign it and send only 1 sheet per group. CPE credit can only be awarded to participants registered as themselves and isn't available for participants who view the on-demand version. This presentation is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
All right, today we have 2 great speakers from Moss Adams. We have Sheila Herrera, partner, and Alla, Keidanska, senior manager. Their bios and contact information are located in your webcast console. And now I'd like to turn the floor over to Sheila to get the presentation started. Sheila?
Perfect. Thank you, Amy. Hello, everyone. We appreciate you joining our webinar. We're going to go ahead and get started. Here is our agenda where we will focus today. I work on various state and local governments, non-for-profit entities, and work with contractors that are, subject to either uniform guidance or FAR compliance requirements. And we have just seen a large increase in the number of questions that we get specifically related to indirect costs. And so, of course, we thought, let's get a webinar out there, get some of the questions we have received over the past 6 months out there. I think part of the shift is many of you may be new to receiving federal award dollars, or you have changes in your grant funding, or you maybe have some personnel changes internally and personnel that were previously taking care of federal award compliance and are no longer with the organization. So we will go through some of the why, some of the basics, mechanics, and then a few examples that we see the most that are a good starting point. I will preference by saying we try to find a few examples that we see regularly and try to be as general as possible. However, saying that, we know very well that some of you have very complex indirect cost calculations and are working with various cognizant agencies that have very different requirements and viewpoints. And so you may have various questions that you all are working through that we may or may not address today. And so with that, Amy, or I'll go ahead and get started here with, are you asking these questions? My organization is new to grants and is considering using the 10% de minimis rate. Should we be using this option? Or my organization has been using the 10% de minimis rate, and should we try to get an indirect cost rate approved? And so short answer, it really depends. And so we'll go through a couple of examples of why or why not today. And with that, Amy, it looks like we have a polling question, just kind of wanting to get an idea of where everyone is falling in the questions that you have.
Yeah, so here's the first polling question. It says, from the audience perspective, where do you fall? And your options are, we use the standard 10% de minimis rate. We are in the process of negotiating the rate. We have an indirect rate that was just negotiated. Or we have an indirect rate that was negotiated several years ago and is needing to be renegotiated. And the polling questions are located right on the slides that we're presenting. And so if you can't see it, you can try hitting the F5 key to refresh your console. And then once you select your answer, make sure to hit the submit button. All right, we'll give it a few more seconds. For those of you putting your responses in the Q&A window, if you want CPE, you need to respond on the actual polling question that's on the slide. All right, here you go.
Okay, so it looks like it's pretty mixed across the board here. We do have quite a few of you that use that standard 10%. We have some that are in the process of negotiating a rate, or you have a rate that was just negotiated, or you're really looking ahead and trying to get a negotiated rate done that was maybe previously done. And so, you know, if you do have the 10% de minimis rate, and you're new to grants, sometimes that is the simple grant structure, then it makes sense for you to use the de minimis rate. We see a lot of organizations adopt this because it really doesn't require you to do anything. It's administratively easy, as no documentation is required to prove out the 10% rate. We also see in some cases organizations go through the process and their rates have fallen below the 10%, so the amount of time and effort that it takes sometimes is not worth the cost benefit. In a lot of cases, we do see that if you haven't done the exercise of calculating your indirect cost rate, that it may be beneficial for you to go through and calculate that rate to determine, you know, where you end up in the spectrum. And so once you go through and say, okay, we've calculated our indirect rate, you know, why go through the trouble? It's an interesting thing because you could come up with a higher rate than what you had been previously getting from that 10%, which means you may be able to recover more federal dollars at the end of the day. Some grants that we see do have ceilings on them where you can recover more and then or up to that ceiling, and then some don't have that ceiling on there, so you can recover more. So if you do have a grant that does have a ceiling that is less than your negotiating rate, you can only recover up to that ceiling. And so that's important to really understand exactly what is in your grant documents and what the cognizant agency is really looking at. And so let's talk a little bit about how, you know, what is an indirect rate and how you all account for some of the costs that you have. And so as you're implementing your federal award programs, you all have various buckets of costs. Well, as part of these costs, you could have direct and indirect costs. Your direct costs, you know, are easy to identify and are allocated over to the grants. And then your indirect costs are, let's skip through here. The indirect costs are costs that are typically common for the organization or are benefiting more than one cost objective. And so the easiest way to look at these is they are not easily assignable to a program or a project or a cost objective. And so if you look at here, you have the CFR guidance that you can go back to. as well. And in there's some additional language. But really, when you're looking at indirect costs, these are some of the examples that you may have. And so sometimes it is, insurance. You may have utilities for the entire building that's being used. You could have accounting staff that maybe do multiple functions throughout various programs throughout the organization. Sometimes we see HR staff that play, various roles within the organization. Any kind of maintenance that's being done for the building, for example. IT staff, a lot of organizations are starting to have more costs related to IT and cybersecurity specifically, and so we're seeing more costs getting built up there. Some audit costs are sometimes indirect. You may have some audit costs specifically related to federal awards, but then you have sometimes financial statement costs as well. Attorney costs, some of that may be able to be included, and so really looking at that and determining how and what indirect costs that you all have. All of these costs together are really referred to as your indirect cost pool. And so when we're looking at what the direct cost is, you're able to identify that. And what does that mean when we're looking at what the rate is? Typically, you have a numerator and a denominator, right, as you're doing your calculation. Well, as part of that, you're going to have a direct cost base. And so that base means that the accumulated direct cost, sometimes that means normally either direct salaries and wages or total direct costs exclusive of any kind of extraordinary items or distorting expenditures used to distribute indirect costs to individual federal awards. The direct cost base selected should result in each federal award bearing a fair share of the indirect costs in a reasonable relation to the benefits received from the cost. And so that can get a little bit complex depending on your organization setup. And so that's something you'll want to talk through and just make sure that you understand kind of where you all have historically, if you have an indirect rate cost, what that base is. Does it still make sense over time? Are there things in there, if we are new to this, that we should really be considering as part of our costs and how it really impacts the grant? And so the next step is really taking a look at, taking all your total indirect pool of costs that you've identified and dividing that by your direct cost base. That will give you your indirect cost rate. A lot of times we get questions because you go through and calculate your rate and it is significantly higher than your 10%. And a lot of times you're thinking that can't be right? The federal agency is never going to approve this high of a rate. I can tell you, as the auditors of various federal awards, we see all types of rates getting calculated and approved, even if they come in significantly higher than that 10%. And so that's really something to think about. And so one of the questions we received from federal funds as you go through your federal funds is we do have these funds. They are with multiple cognizant agencies. Which agency at the end of the day do I need to negotiate my rate with? And so unless you have different arrangements that are agreed to by the agencies involved, typically the federal agency with the largest dollar value awards with an organization will be designated as the cognizant agency for negotiation or approval of the indirect cost rate itself. And so you may have, again, different arrangements. You may have previous negotiated rates and your grants have changed over time. And so just keep that in mind, that it may not be as black and white sometimes, or there's some historical reason that it was being done a certain way. And so what are your your next steps. You want to review, the federal and non-federal outlays to determine your program's being funded, verify with the appropriate staff involved. Sometimes your grant awards are being, managed by a different team than your financial statement accountants and that kind of thing. So really understanding the programs that are involved. Prepare a list of all funded programs in detail as to the amount or percent of the reimbursement of direct and indirect costs and any restrictions or references to statutes or regulations. You really want to understand, again, what's in your grant awards, know what's in there and really what's part of your budget and what you can and cannot, charge to your grant awards. Look at the agency websites or specifically the CFR. The CFR does get updated regularly, and so any updates and the most current information would be in there. There is some specific language on some of the agencies regarding some of that, and so just keep that in mind as you're starting to build out or look at your indirect cost rates that you may be subject to certain requirements there. And so, really looking at, the last bullet here. Sorry about that. Determine at the organizational level the various funded programs and what applies. And so, really, how do you keep track of all of your programs, all the organization part, who the agencies are, who you're reporting to? That also becomes important, and just making sure communication is going all ways there. And then reviewing the accounting structure, if you're new to grant awards, you want to make sure that you're building up your general ledger appropriately, all of your costs. You want to be able to easily track all of your federal award costs. So that setup for the general ledger becomes very important. You will also want to be able to track your specific direct and indirect accounts for tracking purposes, because that lays out what goes into your rates. You will need to be able to map all of your accounts to what is indirect versus what is direct, and really what's included in what you're determining your base to be. And so at some point, as you're going through the negotiation process, the government may say, hey, can you show us these costs? They may want some sort of assurance from you that you're properly able to prove out what's in your indirect rate calculation. And so just keep that in mind, that your setup becomes super important, and how that chart of accounts, and I know a lot of organizations have that differently, but you want to be able to show this to the government. And really the other thing is, what is allowable versus unallowable? We see those questions a lot pop up too, because that becomes part of what gets pushed out of that calculation. You don't want to be including anything that's unallowable in your indirect rate cost calculation. Amy, it looks like we have another polling question here.
Yes, so our second polling question is, our accounting system has been reviewed and your options are properly track the necessary costs in accounts, need some work to get the chart of accounts updated, or we have had some changes in our accounting system and don't know the status. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. All right, a few more seconds. Make sure to select your answer and then hit the submit button. All right, here are the results.
Great. Well, it looks like everyone, or most of you, are already properly tracking the necessary costs and accounts, which is super important. And then some of you are, there's always room for improvement. We always find some things where, accounts are created and not quite mapped, or we're going through the process now and realizing, oh, we need some more work. So we're trying to figure out, what makes sense, what still is considered direct to the programs or to the federal awards, and then really what is an indirect cost. And so just keeping that in mind, that sometimes those do need to get updated regularly. It's not always just consistently done because there's a lot of people involved sometimes in the accounting of things. And so Alla, I'll hand it over to you to get going here on the mechanic side.
Thank you, Sheila. Hello, and thank you for joining us today. I will go through a few examples that would be related to the indirect cost rate mechanics or the choosing the best direct cost base. And I will start with the mechanics for the indirect cost rate. As Sheila mentioned before, basically indirect cost rate, this is a device for determining in a reasonable manner the proportion of indirect costs that each program should bear. It is the ratio which is expressed as a percentage of the indirect cost to a direct cost base. The direct cost base selected should result in each award program bearing a fair share of the indirect cost in a reasonable relation to the benefits received from that cost. Few points to keep in mind when we look how the indirect cost rate works. As I said, it's calculated by multiplying direct cost base and indirect cost rate, and that will give us indirect cost recovery. Please keep in mind that indirect cost recovery, this is the maximum that the program can recover, maximum of indirect cost that the program can recover. As I said, keep in mind a couple points. Indirect cost rate is applied to a direct cost base, and indirect costs are not reimbursed on a specific identification. Now let's discuss what are financial reporting options for indirect cost pool. There are no single required format for the financial reporting. However, Department of Interior Business Center requests that pool be shown separately in the annual audit. There are a few reporting options that could be used. The one option would be to report indirect cost pool in internal service fund. The advantage of using this option would be that it would be easy to monitor as a standalone fund with one net position. There is another option to report indirect cost pool as a separate department in the general fund. However, if we go with this option, there is a chance that it will be buried among other general fund departments that should be reported separately in notes to the financial statements or in a supplementary schedule. What is indirect cost cycle? At the beginning of the year, the indirect cost rate should be established for the coming year. And again, as I mentioned, the indirect rate would be calculated by dividing budgeted indirect cost pool by budgeted direct cost base. Let's look into example when, let's say, we have $100,000 of indirect pool and $500,000 direct base. Using those two balances, we would come up with the indirect rate of 20%. I also would like to mention that Department of Interior Business Center has a few good examples and templates on their website. So you probably can go and check that portal to see those templates. As year progresses, there would be expenses incurred that should be recorded in indirect cost pool. Example, as we would pay cash for those expenses, the charges will be recorded in indirect cost pool fund. An example of those expenses could be salary, fringe benefits, insurance, repairs, or other expenditures. As the year progresses, we should record this indirect cost to the program. So how that's done? We should use the indirect rate to charge to the program. Typically, such an entry would be made through a journal entry, and a monthly journal entry is recommended, but it could be done on a quarterly basis, or sometimes we've seen at the year end, but monthly journal entry recommended. Let's look into example. Let's assume that we have Indian Health Service Program, and that program spent $25,345 during the January on direct cost. Considering that we calculated indirect cost rate of 20% in our previous slide, indirect cost rate journal entry that we need to record for January would be using this direct cost of 25,000 multiplied by 20% of indirect rate. We will get a total of $5,069 of indirect cost charge. So what would be an example of the entry to record this indirect rate? As we mentioned before, the entries will be recorded for the program, in Indian Health Service Program, and also would be recorded for that fund that we designated as an indirect cost fund. So the first entry needed would be debit indirect cost expenses of $5,069 to the fund, to Indian Health Service Fund, and the other side of entry would be due to the fund where we record the indirect cost. In this instance, we use due to indirect cost fund of $5,069. And then the mirroring entry would be in the indirect cost fund, where we would record debit due from IHS fund, and credit would be recorded as an indirect cost revenue in the same amount. Now let's look into what types of rates there. The first one that we have on our slide is the provisional rate. A provisional indirect rate, this is a temporary rate which is established for a given period of time to permit funding and reporting of indirect costs pending establishment of final rates for that period. We also have a final rate which is established for that period but using actual numbers. If we use the provisional rate, that would be calculated prior to the beginning of the year based on the next year budget. We typically see that this rate structure is used in non-for-profit organizations, sometimes governments or for-profit entities. From what I've seen, tribal entities typically do not use this type of rate because of departments often carry backlog and then because of timing of audit. Next, two types of rate that I would like to touch are predetermined rate and fixed or fixed carry forward rate. Predetermined indirect cost rates are permanent rates that established for a specific future period, and they are based on estimate of the cost for that period. Except under very unusual circumstances, this type of rate is not subject to adjustment. Predetermined rates are established when there is a reasonable assurance that is based on experience and a reliable estimate of the organization's cost, that the predetermined rate will approximate the organizational actual rate. The other type is a fixed carry forward rate, which is based on estimate of cost, normally the budget. The difference between estimated and actual cost of period covered by the rate is carried forward as an adjustment to the rate computation of the subsequent period. And typically what we see that subsequent period may be 2 or 3 years. So basically, again, to repeat that fixed carry forward rate is the same characteristic as predetermined rate, except that the difference between the estimated and actual cost of the period is carried forward as an adjustment to the rate computation of a subsequent period. And Annie, looks like you have another polling question.
All right, thank you. So our third polling question is, we currently have the following rate, and your options are provisional rate, final rate, predetermined rate, or fixed carry forward rate. And while you're responding, for those of you that would like a copy of today's slides, you can download them now from the folder that says slide deck and handouts. And then we're also sending them out via email tomorrow, along with a recording of this webcast. All right, a few more seconds. Make sure to hit the submit button. All right, here are the results.
Okay, and as it would be expected, we see the different varieties for the indirect rate use, which absolutely makes sense because every organization should decide for them which rate would work the best. Okay, so let's continue with an example of fixed rate with carry forward. Let's consider that we, let's say, had the negotiated fixed rate in 2020, total of 40%. And the direct cost base in that year was 10 million. And for that year, actual indirect cost was 4,200,000. Since we using 2020 and we decided that our subsequent period would be 3 years, the carry forward that we'll adjust will be in 2023 for this specific example. To then continue looking into our basic data, we see that indirect cost recovery in 2020 was 4 million, which gave us actual rate for that year 42% and led to under recovery total of 200,000. So then 2023, the subsequent of the 3 subsequent years in, we have the following data. The actual indirect cost for this 2023 was 4,500,000. However, since we had the unrecovered carry forward from 2020 total of 200,000, now this 200,000 can be added to the actual indirect cost. So the indirect cost in 2023 will be 4,700,000. And if you consider the direct cost base in 2023 the same 10 million, we can have the rate, if we use rate with carry forward, the rate would be 47% and 45% rate if we do not use the carry forward. Okay, those are a few examples of the indirect cost rate, and now let's look into practice for indirect cost. In this portion of our presentation, I would like to touch on the difference between the granting for under the Public Law 93-638, which is the Indian Self-Determination and Education Assistance Act, and non-93-638 funding. Please keep in mind that some agencies will not permit payment of indirect cost in the amount generated by the Interior Business Center negotiated rate. Also, the rate approved for that agency's funds may be lower than the Interior Business Center negotiated rate. And public law contracts and Public Law 93-638 contracts and contracts are fully funded, whatever the agency rate is. We added this question just to keep in mind when we will be reviewing the next scenarios for using indirect rate. So let's say your organization's indirect cost rate is 33%, and a non-638 grant or contract only pays at 20%. So the question would be, where does the money come from to pay the indirect cost pool for the differences. And as you know, the answer would be yes, it would be the $100 money from your general fund. So now let's look into a few examples. In these examples, where we would compare 93-638 funding versus non-93-638 funding, we would consider indirect cost rate of 30%. So let's say your organization is awarded $600,000 of federal contract. Considering if it is not a 93-638 contract, indirect cost comes out of the total funding of the contract. If your organization has negotiated an indirect cost of 30%, that means the program will use $180,000 of the $600,000 funding for indirect cost, which would leave only $420,000 to spend on direct cost of that program. However, if your organization gets a $600,000 contract, which is a 93-638 contract, indirect cost is actually added to the program's base funding of $600,000. So if your organization has negotiated an indirect cost of 30%, the program will end up with an extra $180,000 for a total of $780,000. So on these two examples, you can see why the type of funding the organizations receive is important, why having a higher rate might be more desirable for the 93-638 contract. To continue with this strategy, is a higher rate bad or good? And the answer will depend on who you're asking. You may see the program director say, no, high rate is not good, it's bad, because program director might think that indirect cost is just a tax that the organization takes. And the higher the rate, the less the program gets to spend on the direct program services. However, if you would ask CFO or indirect cost proposal writer the same questions, the answer might be different. They may say, no, a high rate can actually benefit organizations, considering a few factors, such as those most grant funding would be from Bureau of Indian Affairs and Indian Health Service, because BAA and IHS consider that they are funding on the 93-6 public law, and they would add indirect funding on the top of base funding, unlike Housing Department or Environmental Protection Agency, Agriculture, other, where indirect must came out of the finite grant amount. Also, we should consider if there is an option to have some general fund money used subsidized programs that cannot pay high rates. Now let's look into few scenarios when we look into the using higher rate. And I'm understanding that this is very difficult to follow. We have multiple numbers and not easy to comprehend everything. So I will try to point out on those areas that actually shows the benefits, potential benefits of using high rate and which balance would be affected. In this our scenario, we're using a base budget where we consider indirect cost pool of 1 million. Direct cost based for this scenario is considered to be 2,650,000, and indirect rate for this scenario is 37.7%. We selected 5 different programs. 2 of those programs will be under Public Law 638, IHS, to IHS and BAA. 2 programs, EPA and TANF, they are non-638 programs. And Head Start, it's also non-638 program, and we use it as an example also to remind that if a program has a capped indirect cost, Those increases will not affect this program because this is the capped indirect cost is the maximum indirect rate that could be charged to this program. This is something important to keep in mind. Using these balances, we will have the total cost, we will have the necessary exclusions to get to the direct price, and using the indirect rate of 37.7, we would calculate the indirect cost collected, and in will be what is left for the program for the direct cost for this program to run. And again, as you see, for the first two programs that are under 638, the remaining for the program is still the same as the total cost, because as we mentioned before, the indirect cost would be added. While for EPA antenna, the remaining cost for the program will be total cost less indirect cost collected. Okay, so let's look into the next scenario to use higher indirect cost rate. Let's consider in this case that we will have indirect cost rate of 43%, and we will move $100,000 from BAA, which is under 638, to indirect cost pool that could be added and be carried over in subsequent years. And also in this example, we would assume that there is no ability to subsidize those programs that are non-638 programs. Overall, after we will update all calculations, the effect using higher rate and moving this $100,000 from BAA to carryover will be calculated, and it's shown at the bottom of this table. You can see that the overall benefit, we will have additional BAA carryover of 100,000 later periods. Using higher rate will lead to decrease in direct program available funds. So we will show it as a negative of 151. However, because we will have high indirect rates for those programs which are under 638, we will have also increase in indirect cost collected of 81,000. Considering all of those changes, the net benefit would be approximately 30,000, which is still good. Maybe it's not that huge, but it's still beneficial to the organization to use higher rate. Let's look into another scenario when we will have the same fact that we will move 100,000 from BA to indirect cost pool, but let's also consider that there is an opportunity to subsidize those programs who cannot pay higher rate. Using this scenario and considering our recalculated ending balances, we came to the conclusion that it is still beneficial to organization because the additional BA carryover, we still have the same $100,000. The decrease in the program will be lower because in this instance we were able to subsidize those EPA and TANF programs, so indirect cost collected will be similar as the original initial scenario. And we also will have the increase in indirect cost collected. So net benefit will be still 30,000, and this scenario will be still beneficial to use for the organization. We can look into another scenario, but let's consider in this case that we will not move the spending of 100,000 to carry over, we will just increase the cost. So by increasing this cost for the program, which is again considered 638 program, that would lead to increase in indirect cost collected for those programs. And considering that we also were able to subsidize EPA and TANF programs, the overall benefit will be increased in indirect cost collected total of 50,000, almost 51,000. So as you've seen, there are various scenarios that could be used depending what will be more beneficial or what opportunity the organization has. So now let's look into the strategy of choosing a direct base which will be more beneficial for the organization. And there are choices for the direct base. For Uniform Guidance CFR 200, Appendix 7, there are three options. The distribution might be using the total direct cost, excluding capital expenditure and other distorting items such as pass-through funds, subcontracts in excess of $25,000, participant support costs, etc. The second option is direct salaries and wages, or salaries, wages, and fringe benefits. And the third option would be another base, which results in an equitable distribution. So I would like to walk us through the example when we would use salary or salaries and fringes as the base that can provide better benefits to organizations. Okay, so two scenarios. And again, I apologize for a lot of numbers here. We are accounting to a lot of numbers. I will try to, again, point out on those areas that will show the benefits to your organization. In this scenario, we have three columns, different columns for different programs. The first two columns will be Indian Health Service, then second BAA. Two of those are under the Public Law 93-638, and then one column for non-638 program. We consider using salaries and fringe benefits as a direct cost base. So we see now that the overall direct cost for non-638 was $2,660,000. So let's look that we also see that the tribal subsidies for non-638 were $925,000, and indirect costs collected was $665,000 for non-638 program and $1 million for BA program. Let's consider a scenario when we are able to pay some program managers' salaries from BAA fund, actually, not from non-638. So let's consider moving the cost of salary and fringe benefits from non-638 to BAA program. And this is the result of this scenario when we will consider moving some cost of salary and fringe benefits from non-638 program to BAA program. Those that highlighted numbers shows us what that would lead us to. So the benefit of using this scenario when we are shifting salaries from non-638 to BAA program would lead to decrease in the tribal subsidy of approximately $365. That would also lead to increase in direct cost for BAA that could be collected as added to also $365,000. So the overall benefit, considering all of those increases in BAA add-on indirect costs and also decrease in tribal subsidy, will actually lead to the benefit of approximately $730,000 for the organization. So those were a few examples and strategies that organizations can use when they decide to determine which indirect rate would be more beneficial or which direct cost base would be best for the organization. And now I will pass back to Sheila.
Thank you, Alla. That was great. There's a lot of, as you can see, a lot of different examples and methods. And again, every organization will be different, and you may have different things in there. And so the examples here are just kind of meant to see what kind of overview we have, or sometimes some of the things that we see from some of our clients or questions that we get asked a lot. And so as you start getting through, you determine, yes, we have, we're going to go ahead and move forward, calculate our indirect cost rate. What do we really need to provide to the cognizant agency? And so we get a lot of questions about, what do we include? Are there examples? And so you're really looking at providing a proposal to that cognizant agency about your costs. And so they may be looking at costs related to your personnel, and they'll want, a worksheet related to that, and that'll include any fringe benefits that you have. The allocation, they're looking at providing some level of detail between that indirect and direct time and how it's being charged. And then your fringe benefits, they're really, having you track what is in that breakdown. And then looking at your total cost at the end of the day, what do you have to support that indirect and direct cost breakout? You want it identified by federal agency. You want it to be shown by federal grant or contract. Some of you have various programs where you may have multiple grants that are overseeing a specific program. And so tracking that cost gets a little bit complicated. And then really, what are your non-governmental or non-program activities? Just trying to get an idea, from them. They're wanting to see what those total costs are. And then your statement of indirect costs, again, looking at what makes up your total indirect cost pool. Are there specific costs in there? How do you come up with that base? How do you come up with the rates at the end of the day? And so they're really looking at it as you all are building out those costs. How are you tracking things? Can they look and see, does this make sense? Is there anything here, that they're going to go back to you and ask questions on? It's very likely that they will. Have you, provide them some additional detail, or they'll have questions about why you have certain costs in certain buckets. And so they want to, be able to get that answer from you so that they can actually approve that rate for you. And so, Amy, we have another polling question here.
Yeah, so this is our last polling question, and it is: the biggest challenges in creating an indirect rate are, your options are time, understanding, accounting system, or other. And if you select other, we're curious what that other is, so you can drop that in the Q&A window. We'll leave this up a little bit longer. Once you've completed your CPE requirements, you can download a PDF of your certificate from the CPE progress window. All right, here are the results.
Thank you, Amy. And so it does look, just time tends to be the biggest one. Of course, it does take time. A lot of organizations are limited to personnel, and you have, your day jobs. And so trying to find the time to actually go through the process of figuring out what your indirect rate is can be very overwhelming. And then the understanding that obviously, as Alla showed, there's different methods to do this. And so some of that gets super complicated as you start digging into the details. And if you haven't gone through this process before, you'll likely have a lot of questions. And so, reach out to your CPA, reach out to, if you have others that you work with that may be going through the same thing, that have a lot of federal words, they can help as well, just to help you kind of continue to gain an understanding. We see various accounting systems being used, and some of those accounting systems have certain limitations. And so a lot of times, tracking that cost is not an easy task. And so, it may be something to look at going forward. Does this still make sense? And so, if you do have, and we get one of the questions, if we have a negotiated rate, can my rate be modified? Typically, your existing negotiated indirect cost rate remains in place until it expires. And then, once that effective data changes to your rates, it must be based upon that date that the newly renegotiated rate goes into effect for any specific non-federal entity fiscal years. We did get a question in the chat that if our grant says, we initially applied at the 10%, and at some point we've now negotiated a rate, we then go back to, the grant award, whoever awarded the grant, and say, we have this negotiated rate, can we use this? And you can notify them that you do have a negotiated rate. They may honor it, but they don't have to. And so it is good to notify them if you do go down the route of, getting a negotiated rate during a grant where it's already in the middle of a period of performance. They may go through, depending on the grant that you have, they have obviously requirements on their end that they have to work through internally. So sometimes we see them allow that, and then sometimes they go back to what was in the original grant document. So just keep that in mind. And so the OIG is constantly looking at, how individuals and how organizations are submitting their indirect cost rates to these agencies, and what is really, some of the pain points that they see. And so we put this list together from some of the OIG reports out there. And so really the first one is incomplete indirect cost proposals. A lot of times as they're going through this process, you may have proposals where you submit part of the information and then they're going back and forth with you on trying to get the rest. And so if you can have that proposal package as completed as possible, when you first send it, then that limits the amount of questions that cognizant agencies will have. Timekeeping practices, to be allowable, those labor costs, whether they're charged directly or indirectly to grants or contracts, the cost must be, based on an accurate timesheet reflecting the actual activities of all the employees. And so those timesheets must account for the total activity for which employees are compensated and how they're filling their obligations. And so a lot of times the timekeeping system was either not used at all or was used for payroll purposes only. And so really keeping that in mind, that you really need to have good timekeeping practices. And then consistent treatment and specific identification of costs, to be allowable under the grants. Costs must be treated consistently on all programs of the organization. The OIG audits, if you look at the reports, they've disclosed numerous instances in which organizations have charged grants or contracts, either direct or indirectly, and they really, haven't been able to say that those costs are correct. The allowable versus the unallowable, we see a lot of this because accounts aren't being properly tracked. You're not kind of understanding what's allowable to your grants. The cost principles, really understanding what's in there and what can be charged to grants versus what can't be charged to grants. So really understanding what's in that piece. Any credits, there's been a number of organizations that failed to reduce the total cost claimed under grants or contracts by the amount of credits applicable to costs charged to either directly or indirectly grants or contracts. And so sometimes that's income that gets received and they haven't reduced the indirect cost allocation by that. And then with the indirect cost allocation base, if you have any kind of inter-organizational transfers or related party transactions here, any kind of budget limitations, and then unsupported costs. And so again, to be allowable, all of your direct costs and your indirect costs must be adequately supported by source documentation, which clearly shows the purpose and circumstance of the cost incurred. For example, we see a lot of things like canceled checks or credit card invoices or travel agent invoices alone to try to be able to support the cost, and whether they're direct costs or indirect costs. And so sometimes that really doesn't meet the requirements. And so really understanding, what you all have in that bucket. And so I know we got quite a few questions here. Please feel free to submit your questions in the Q&A box on your screen. And then if there's something I haven't responded to or Alla hasn't responded to, we'll get back to you on some of those questions. And I do want to say thank you real quick to everyone that joined the webinar. We sure appreciate all the feedback and a lot of the questions that we have received so far.
All right, thank you, Sheila and Alla, for a really great presentation today. We are out of time, so I'm going to go ahead and get us closed out here. To our audience, You can reach out to them if you have additional questions. Like Sheila mentioned, drop a note in the Q&A window, or their contact information is in the slide deck and then also in your console. And if you met all CPE requirements, your certificate is available to download now in the CPE progress window. A copy will be mailed within 2 weeks if you have difficulty downloading it now. And then finally, here's a link to a survey for today's presentation. Your feedback is appreciated, and thank you for joining us. Take care, everyone.